Frequently asked questions, 1031 exchange acronyms. There are certain abbreviations and acronyms that many discuss in relation to 1031 tax deferred exchanges. What I wanted to do is just provide a simple definition of some of these basic terms of art and some of the terminology so you understand, if you hear the abbreviation, what that is referring to. First off is a DST. A DST is a Delaware statutory trust, and these came about under the guidance of Revenue Ruling 2004-86. So these are a form of fractional ownership where a taxpayer acquires a slice of a much larger property. The EAT is the Exchange Accommodation title holder, and the EAT is used in what we refer to as a parking arrangement transaction, when the QI or an entity owned by the QI is actually parked on title to a property. This would be in reverse exchanges, improvement exchanges, and reverse improvement exchange transactions. So the term that you'll typically see is the term EAT. This can also be referred to as an accommodation title holder or simply just a title holder, again, all synonymous. The FTB is the Franchise Tax Board. This is the state body of taxation in the state of California. The IRC is the Internal Revenue Code. So this is the body of statutes and tax laws that we all operate under in terms of paying our taxes and how taxes are determined. The IRS is the Internal Revenue Service. This is the entity that follows up on the collection of taxes that are paid, and the taxes are paid pursuant to the Internal Revenue Code. The NIIT, sometimes referred to as a NIT, is the Net Investment Income Tax. This was added to the tax code back in 2010 under a new section, Section 1411. And this is a tax on what's called net investment income. And we'll go into this in more detail on a later segment, but it's an additional 3.8% tax that is associated over certain income levels, so certain thresholds to go ahead and have this tax be effective. The QEAA is the Qualified Exchange Accommodation Arrangement. This is a situation, again, dealing with a parking arrangement transaction, so a reverse exchange, improvement exchange, or reverse improvement exchange, and it really outlines the parameters of that relationship. A PLR is a private letter ruling. So it's a private letter ruling. This is a situation where one taxpayer provides their unique facts and circumstances to the IRS and asks for an opinion as to whether what they can do can be permitted or not. And the IRS will come back and say, yes, this is permitted, or no, it is not. Now keep in mind, a private letter ruling is applicable only to one taxpayer and their unique situation. However, we find for taxpayers around the country, this does provide some level of guidance. If another taxpayer has very similar facts and circumstances, there's a high probability that they may receive the same outcome. So a private letter ruling is only applicable to one taxpayer, but it does provide a little bit of indication regarding the IRS's leanings and their perspectives on various fact patterns and what may qualify or what may not qualify. A PIN is a partnership installment note. This is a mechanism used with partnership and LLC situations where some of the partners would like to exchange, some would like to receive the cash and pay the taxes, or some of the LLC members would like to exchange, others would like to receive the cash and pay the taxes. And so this is a creative planning approach dealing with Section 453 of the Code, the installment sale rules. And again, we'll cover this in more detail on a later segment. The term RevProc refers to a revenue procedure. So that's an abbreviation. A revenue procedure is tax guidance provided by the IRS on various subjects. And frequently, a revenue procedure will start with 4 numbers, which references the year that they release the revenue procedure. And finally, a TIC is tenant in common ownership. The guidance from this came about in the year 2002 under Revenue Procedure 2002-22. This is another form a fractional ownership. So you see the very first acronym was a DST. Today, most of the fractional ownership structures are set up as a DST. And in a later segment, we'll go through why that is and some of the advantages. However, beginning in 2002 and for probably at least a decade, the tick structure was a very popular form of fractional ownership. To review your specific 1031 exchange situation, contact Asset Preservation's headquarters in California at 800-282-1031 or our Eastern Regional Office in New York at 866-394-1031. Please read the full disclaimer, as Asset Preservation cannot provide tax or legal advice.